Right. So thank you, everyone. You're all welcome. In the last class, we're talking about double entry principle, and we've looked at accounting equation. I'm sure all of us can talk about, say one or two things about accounting equation right now. That is the one that works for statement of financial position, where you have your assets equals to liabilities plus equity. Now you need to begin to familiarize yourself with all these things, because in your OBJ it can just come, in your theory it can just come. So you need to be sure that everything we are doing, you are getting the graphs. And that is why I always make sure, if anybody have a question at any point in time, just feel free to ask, so that we'll try as much as possible to provide a response that may help you to get a clearer picture of that thing that is not looking so clear to you. So thank you all for joining. So last class we talked about double entry principle, and we said there are two double entry principles. For every debit entry, there must be a corresponding credit entry. Then the one that says debit the receiver and credit the giver. So we're trying to establish that in the last class, and I'm sure we got a very clearer picture of how double entry principle works. So basically, double entry principle is talking about, or double entry bookkeeping, or whichever way you want to call it. Basically, it's just talking about you having that thing called double, as it is. So far there is a debit entry for it, there must be somewhere that you're going to credit, and that is why it's very difficult for you to easily manipulate things in accounting, because when you are debiting something, you must credit somewhere. When you are crediting, I think being accounting is very easy for you to just say, okay, let me just put the money here. There's no need for me to put the money somewhere. I mean, so many things will be distorted in our financials and all of that. But thankfully, we have accounting that is dual in nature, which is dual. So you are debiting or crediting something every time you need to do something. So we'll talk about ledger. We said that T format, where you have the debit entry, the credit entry, as the case may be. So then let me just move to, okay. So we have this overview of accounting. This overview of accounting. What's this thing? So I don't know where it's hanging. Let me see. So we have this overview of accounting. So it's talking about so what they mean by an overview of accounting is the inception, where accounting starts, all down the line till you have your financial statement. So basically, when we say overview of accounting, we're talking about, so they gave an illustration here to say the first thing is there's a transaction. So there's a transaction. So we say a business faces many thousands of transactions. You know, of course, business faces different kind of transactions per day, from inventory to receivable to payables to sales to purchasing to everything that takes money out and brings money in. Even if the money is not physically coming in or going out, the transactions are transactions so far. And that is why earlier the first chapter in this financial accounting class is business and accounting. So we said business is anything you do that you exchange it for money. So you are rendering services, or you are selling products in exchange for money. That is business. I will now say the accounting part is also there, whereby you have to separate the owner from the business. You have to separate the owners from the business. You have to be able to accountable for the business. You have to know what is stewardship, you being rendering accounts. We have to know what is the principal, the agency, the shareholders position, all of that put together what we call accounting. Talk about the definition of accounting, all those recording, uh, classifying, interpreting, all of that put together. They define what accounting is. Now, we're not looking at what is the overview. Now we have a business faces many thousands of transactions. We have different transactions, as I've said earlier. And the first thing that comes is, okay, you are recording the transaction in a book of prime entry. Although this is not so common again, since the advent of what's it called? What do we call it? Accounting softwares. You record transactions as in real time, unlike before. Sometimes, of course, some businesses still do that. Those ones that are still more of manual. So they will, let's say they sell for, where are the people here? So let's say they sell for Bukola. Let's say they are sales. So they sell for Bukola, they sell for Fizi, sell for Lizzie, sell for, okay, let's say these three people, right? Now, let's say they sold 1,000. Let's say they sold 2,000. Let's say they sold 4,000. Now, when they had up all this money, so this is their sales. So they are recording the transaction here for now. So at the end of the day, let's say today closes, they will now put this money now. They will now take it to, they will now go and debit the bank and credit their sales for that day. So that's the book of prime entry. So it's the first place that transaction is recorded. Instead of recording the transaction, each individual sale in general ledger, an entity might record all sales in a day, then record the total sales. So that's just the basic thing they're trying to say, like that is the way they usually do it. So that's the book of prime entry, the place where you record your sales transactions initially. The first place you record transaction initially before you then take it to the proper ledger that is supposed to be. That is book of prime entry. Then you have accounts in general ledger. So accounts in general ledger means that you're not putting everything, just like some of us that practice here and those that are not practicing is not a problem. We'll put it easily for you. So like I said here, I said debit, then you credit something. Now, in this case now, we've sold goods worth 7,000 naira. Sales is 7,000 naira. Now you have bank or cash, provided the sales were made in cash, or let's even say receivable. Now, so now we have sales here. Now, the accounts in general ledger is this. So now I'm looking at, okay, I've sold goods worth 7,000 naira. What am I debiting? I'm debiting my accounts receivable if the person bought it on credit. Let's assume they bought it on credit. That means you're putting it in account receivable. But if they paid instantly as well, you still debit it to your bank or your cash. Then you have your sales. Then your sales will then be credited, right? So that's what we mean by accounting in general ledger. Then we have this trial balance. For instance, now let's say this is our let me, so I will have to separate this. Let me put it this way. So let's say this is my sales GL. If this happens to be my sales GL, what I'm going to do is supposed to be sales account. Now, what I'm going to do is that, okay, I've sold. So here, that's what will be here because this is an income account. So I'll credit it sales. I'll say bank / cash, whichever one it is. And I'll put the 7,000 naira. Now, the same thing is applicable to my bank. Are we following? Bank.
Yes.
All right. Great.
Yes, sir.
So I have sales. I should go. I have sales account for 7,000 naira. Now this is cancelled. Now let's assume I want to close this account. I'm trying to talk about trial balance. So now let's assume I want to close this account. So I'll say balance carry down. I'll bring this 7,000 naira here. I'll do the same thing here. I'll bring this pin. Now I've closed this account. Each of them have been closed like this. Pin, pin, pin. Now, when you have this balance CD here, it means in your trial balance, you now bring a balance brought down to the opposite side of it. This one now, you bring this one too. You bring it here. I just want to like this. So 7,000 naira. You bring this value, bring it here. Bring this one, bring it here. Now, when I want to do my trial balance, I'll now say trial balance, debit, credit. I'll put sales and bank. So I'll put sales. You can't see my screen. Can anybody not see my screen? Every other person, can you see my screen or not?
I'm seeing your screen.
Okay. You say what? I should do what?
No, like the person should zoom their screen in to be able to see right there.
Okay. Who is that person? Williams. Uncle Williams. Okay, is it Tosin? Who said the person can? Okay, Williams. Tosin. Can you see my screen now, madam? Can you?
No, it's just displaying your name.
It's just displaying my name. Oh my God.
Maybe I should
Okay,
rejoin.
can you log out and join again? Yeah. So as we're doing it, simple, straightforward, it's pretty simple. So now, sales, because sales is on this balance border, you bring it here. No, sorry. This is bank, right? Then you have balance brought down here. On the debit side, anywhere you have your balance brought down for a particular GL, that's where you're going to put it in the trial balance. So I have this on the debit side, I put it here. I have this on the credit side. This balance brought down, put it here. So this means I've done the necessary things for me to do in my trial balance. Anytime, any day, this is correct anywhere, right? So that's just an example of. Then we now have, so it is the trial balance that now translates into your financial statements. What do we mean by that? Your trial balance is what you use to build your financial statements. For instance, we have balance sheets, we have profit or loss. Now, look at these sales now. You have a sale of 7,000. You have a bank of 7,000. Now, it means that in your balance sheets, your bank will be showing 7,000 naira. Your profit or loss, your sales will be showing this amount. So that's how it is built. So this is from transaction to book of prime entry to accounting it in general ledger to trial balance, then to the financial statements. All of them amounts to you saying, okay, this is what accounting looks like in an overview, right? So that's just the basic overview. So we've said this before, right? That we said for every debit entry, there must be a corresponding credit entry, debit the receiver, credit the giver, and all of that. So that is what we did about this. So here they are trying to say it therefore helps to show accounting in the shape of a T with left hand and right hand side. Not surprising, this presentation is known as T account. So then there's something I didn't put here. So I'm supposed to put here debit, then here will be credit. It's very important. It makes your work make sense and easy for anybody to understand. Now, we have well, I don't think we need all this English. So the main ledger, there are three. There are accounts for assets, liability, income. I think we've mentioned this before, that we have assets, the elements of financial statement, elements of financial statements. You have the assets, liability, income, equity, and expenses. So, like we said the other day, that's assets are debit entry, liabilities are credit entry, income is a credit entry, expenses is a debit entry, equity is a credit entry. All of these are things you must follow. Now, when there is, look at what they are saying here, record as debit entry. An increase in an asset is going to increase the asset. It means it will be debited. An increase in expense, it will be debited. That's what they are trying to say here. Then record credit entry. When there is a reduction in each of these cases, then it means you are negating the normal concept that happens in that account, right? Now, so all of these are just to put us through what it is needed. So, okay, there's an example here. This one is too simple now. I think maybe we should look for, let's see if they have a question that we can just solve together, then we can move on from there. Or can somebody attempt this? Let me see. Yeah. So, I've already put solutions here. You don't see more. Yeah. Can anybody attempt that? Yeah. Nobody. Hello. Everybody's sleeping.
No, we are not sleeping, so we are going through the question.
Hey, what are you going through? See it on the screen like this. Simple thing. A purchase invoice is received for electricity charges for 2,300. So what are you debiting? What are you crediting?
We are
What we are
debiting
debiting
trade
is on
payable,
the
then we are
screen.
crediting cash.
So this,
It's on the screen.
We are
we
debiting
are
trade
debiting
payables, then we are crediting cash.
huh?
We are debiting trade payable and crediting cash, right?
We are debiting
No
electricity
cash power.
and crediting trade payable.
Huh?
We are
Anyway,
debiting
Yes, now the
electricity.
electricity.
yeah, I'm listening. Somebody talk now.
We are debiting electricity charge and
Okay.
crediting trade payables.
Why?
Electricity charge is an increase in expense.
Okay.
While trade payable is a liability.
Why is it a liability? Tell me. Oh, yeah. Maybe it's a liability. You have seen it on the screen. Tell me, why is it a liability?
Because it's a service we've enjoyed and we have to pay for.
Did they say you have not paid for it yet? Hmm?
We've paid for it while receiving the invoice.
Of course.
If we've paid for it, it makes it a prepayment.
It's the prepayment. That makes sense, huh? So I just want to be sure, like, we get it. So basically, it's pretty simple. Thank you for your contributions, huh? That makes sense. So a purchase invoice is received. So when you see question, just try as much as possible. Make it easy for yourself. What are they trying to say? It's pretty simple, huh? This is accounting. Accounting is simple. Once you say accounting, just rest your mind that, no issue here. Now, a purchase invoice is received for electricity charges for 2,300 naira, right? Now, the first thing you need to see is, okay, purchase invoice is received. That means we have bought electricity. Electricity that we bought is an expense now, right? And we've said here, anything anything that is an expense, we are going to debit it. Now, they didn't say it. Did we pay? No. It means since we have bought something, and that's why I love what she said, that we didn't pay. Yes, it's a liability, but how did you know? It's because they didn't state the fact that whether we paid. I think they said a purchase invoice is received for electricity charge for 2,300 naira, and we paid cash or we pay via bank the 2,300 naira. There's nothing like liability here again. The account has closed out. We are debiting the expense account, then we are crediting the bank that we used to pay the money. So it would have closed it out. But then we've not paid. So that's why they did it here like this. They put debit electricity expense and credit expense payable account. So this is a payable account, 2,300 naira be credited while this is debited. I'm sure we are getting it like that. Now, we have double entry principal and cash accounts. I'm not sure there's any big deal in all these things. They're just trying to say when money enter into the cash account, it increase. When money go out, it decrease. When you're settling expenses, it decrease. When you're settling trade payable, it decrease. When you take from the money, it decrease. And all those things that are anything on the credit side of your cash book, or your bank, or anything that is on the credit side of any asset we reduce it. That's just it. Anything that is on the credit side of your assets, it will reduce the value of that asset. That's just it. And anything on the debit side of your assets, it will increase the value of that asset. Fortunately, cash, bank are also assets, right? Now, okay, so we have this example. I think maybe we should do this, right? Well, this should be simple. Maybe we should do it. But there should be all this practice question. Do anybody have any past question we can solve for this? Nobody have read? Shukura, you've not read. What's her name? Amara Chuku, you've not read, huh? But today,
The first question I have, this question is not inside it.
okay, that's good. That's fine. That's fine. He said there's a practice question, page 107 on this chapter. You may accept. Okay, I think we should go there. So we have account balances and trial balances. So I've explained this already. That's whatever you have on the, if total debit entry in an account exceeds total credits, there's a debit on the account. If total credit exceeds it, so that means, just like you're saying, one side is bigger than the other side. So one side have exceeded the account, and that will result in the debit or credit and credit balance for each of those GLs. So that's what I'm trying to explain here. And I'm trying to explain closing off this one that I explained here too. This one here, closing off. You are closing off an account by bringing this to this should be balance British. Sorry, by bringing this to this side, so that's a balance brought down. So to close off an account, that's how to close it off. So I'm looking for that question they said. Is there another thing for this chapter? 30 minutes almost gone. Now we have trial balance. Like I said the other day, trial balance is used to test the arithmetical accuracy of the ledger, whether it is balanced. So that is how, like, by the time you put your debit, all those ledgers you have plenty of this kind of bank ledger, sales account ledger, you have a receivable ledger, you have your payables ledger, you have your expense ledger, plenty of them like that. Then you have to consolidate them and now bring them to your trial balance. Now, it is now your trial balance that will now tell you, man, some of the things you have done, they are right, or some of them, they have issues. So when you see that your trial balance is not balancing, it is because something is wrong with those your ledger. You can see this balance tallies with this. In a situation whereby this thing is not tallying, it means something is wrong with your ledgers, because it is your ledger balances that you have in each of these places. It's your ledger balances, right? So, it's your ledger balances that you have in each of these places. Then we can now say, so the purpose of trial balance is to produce a statement of profit or loss and a statement of financial position at the end of accounting period. So it's the starting position. When your trial balance is done, you can pick your trial balance now to use it and prepare your profit or loss. You can use it to prepare your statement of financial position. That's what we're trying to say. And it's a way of checking error, like I defined that the other time, that it is used to test the arithmetic accuracy of the ledger, whether what they have done is correct or not. Your trial balance will show where you're having issues. So preparing accounts for a trial balance. So you can have a different form of accruals, provisions, prepayments, bad debts, all those things, your inventory valuation, all those things. So all of those things are just things that will affect your trial balance at the end of the day when you're preparing your final accounts. So opening and closing inventory. So we have this formula now. This formula here now is a formula for cost of sales, and I'm sure I must have told us. That's when I said opening inventory, you had your purchases less your closing inventory. That will give you your cost of sales. I must have said that before. I'm sure I must have said that. So now, let's see. This one's they're using it to. I don't know what this thing is. So we have general journal. So this is used to record transactions that are not recorded in any other book of original entry. Can anybody explain what is book of original entry? Anybody? This class is quite. Hey, are you people there?
Yes.
Thank you.
The first place that the transaction is first recorded.
That is what?
The first place where a transaction is first recorded before we transfer it to a general ledger.
That's what?
Book of prime entry. Or is that not what you're asking?
Yes, sir. Yeah. You have said something. Let me see if somebody can put it better. Nobody's talking to me. Lizzie, is it correct? Ma, is it correct?
Already, sorry, what is the
Oh,
question, sir?
no. I said,
Emma
what is the
Bibe.
book of prime entry? What's the book of original entry?
I think it's correct. Book
Something you did
of
not hear. You
original
think it's
entry
correct?
is the account. Is the book? No, I heard what he said. Is the book that an account was first recorded
Okay.
in transaction.
Okay.
Yes, is the first book
Okay.
that a transaction was first.
Okay.
I heard what he
Okay.
said.
All right. So since you people you've gotten that, so that's okay. We can move. Another illustration again. I thought they said there's a question somewhere. Wow. So I just want us to solve that question. Then we'll just okay. So we have a chart of accounts. We all know chart of accounts, right? So your chart of accounts is still boils down to the asset, liability, income, expenses. So your chart of accounts is the breakdown. So you have assets, you can have plenty assets, you have plenty liabilities, you have plenty income, you have plenty expenses. All of them put together are various charts of accounts. So chart of account, and that's why you usually have your chart of accounting, depending on your organization, depending on the software that you use, you have you can have asset now. I don't really know how they use those codes, but it may be 2001 to 2999. They will now say liabilities. Yeah, can we hear me now?
Yes, I
Yes, sir.
Oh, somebody shouted me out. So sorry. I don't know. I don't know what happened. Yeah. Can we see my screen?
Yes, sir.
Yeah. Oh, I thought they said there's a question. Huh?
page 107.
Page 107. Oh, maybe this is right. This 107 now. Oh, it's even that's the end of the chapter. Okay, so let's try this one. So that so all of you will now be picking one, the one you like. Or no, let me be calling you one after the other. Don't tell me your network. I don't want to see anybody log out. Don't log out. Shukurat, your network must not go off now.
It's my voice that is gone.
Okay, it's okay. That's good. So you have this. They said they've put all the questions. They now said post all transactions. I don't know why this AI thing is coming. Just hide. Ah, sorry. Post all transactions to ledger accounts. That's A. Close off each account and extract a trial balance. Then prepare a statement of profit or loss accounts. Okay, statement of profit or loss account and statement of financial position. Assume that Emmanuel has a closing inventory of 50,000 naira. Right? Now, my people. It's already I want you to go and sleep on time. Oh,
Can we
right.
do it as assignments?
Okay. People agree to take it as an assignment, right? Yeah.
No, sir. Let's
Yes,
solve
sir.
it here, sir.
No, sir. Let's
Let's solve
study
it
it
here, sir.
together.
Let's solve it here, sir.
No, let's do it.
Is here, all of us will sleep here. Trade the profit and loss and balance sheets.
Oh, God. So, how many are we here? 1, 2, 3, 4, 5, 6, 7. So, how many people agree that we should do it here? How many people agree that we should?
Let's do it too. I know we will not finish it.
Why not? I'll be very fast. All right, so let's do it then. Since some people are scared of simple question, right? You're not scared. All right. Don't even know how to reduce this thing further. You sure can see it. All right, so they say we are preparing for A, post-op transaction in ledger. This will take time. One, two, three, 1, 2, 3. So I can say divide this into 2. So I have debits and I have credits. Now, So we have the manual set up a trading business. Can we see it? Can we see it?
Yes, sir.
Okay. Now, when I want to ask question. What? Huh?
Yes, sir.
So manual set up a trading business, buying and selling of goods. Record the transaction which occurred during the first month of trading, July 2019, in the relevant ledger account. Now we have Emmanuel introduced 500,000 naira into the business by paying money into a business bank account. Who will I call? I'm seeing Shukra's name first. No, I don't want to call Shukra.
Why are you saying Shukura? She be Baba someone now, not answer again.
No, let me start from where I like. Concord Juliet.
You don't like Shukura?
I don't like Shukra. Concord Juliet. Am I calling it well? Concord Juliet. Concord Juliet. Are you there? Or you're in the kitchen? You're eating. She's not there. Huh. What is it? Okay. Yeah. Shukrat. Yeah, do it. I'll look for somebody else. So which account are we opening
So
first?
we are opening capital accounts and bank accounts.
Capital account and bank account. Okay.
We are debiting bank and crediting capital.
Okay. Let me admit that person. Welcome. You are welcome in the name of the Lord. Right. So you said I should. So Shukrat said I should capital account. Shukrat has said it too. You said I should debit capital account, right?
Credit.
What this? Okay. What should I write?
Credit
What should I write?
bank.
Bank. 500,000, right?
Yes.
Okay. Then here go.
Bank accounts. Capital. Yeah.
Okay, let me put this here. So I'll put the 500,000 as well. And then I'll put it here. Right. Yeah, who's next? Who is next to Marachuku? No, Fizzy. Fizzy is the next person from my screen here. Fizzy. Yeah. Next question is saying, Fizzy, are you there? The business bought a motor van for 60,000 naira. Payment by was check. So they pay by check. Fizzy, tell me something. Are you there?
Yes, I'm with you. Yes.
Thank you. You're welcome. Yeah. What are we debiting? What are we crediting? Yeah, nah. Tell me nah. You are loading. Sorrow. Easy.
I'm with you. Yeah.
Hey, but you're not talking.
Let's see.
Mm. All right. So
Check.
Huh? So now let me tell you something. It's simple. Don't complicate it. It's very simple. You see this check that you're saying means bank, right? Anyway, you see, they're referring to bank. Did you get?
Yes, sir.
Anyway, you see check, they're referring to bank. That's the way account operates. That's the way journal entry operates. So now, they now said the business bought a motor van for 60,000 naira. Payment was by check. You can see, I think they just said the business bought motor van for 60,000 naira. They didn't say anything again. Would have just debited the motor van, which is an asset. They would have credited our payable account with that 60,000 naira. But because they now went further and now said payment was by check, means that payments left our bank account. So we're going to open another account. Check Badum. So we'll now say motor van, right? Fizzy, are you getting it? So motor van, the things that happen in this account, in this number 2, is that motor van was purchased and payment was by bank. So motor van will now say bank 60,000 naira. They will now come here. This is our bank. Debits the receiver, credit the giver, right? The receiver is motor van. The giver is the bank account. You can see it's very simple. You now say motor. Hey, what are those great crashes? You now put 60,000 naira. Show clear. Is it clear?
Yes, sir. Yes, sir.
Welcome, peace. The peace of the Lord be with us. So we have been able to do that one. Now, number 3, I can see Babatunde Edu. Mr. Babatunde Edu, yeah. The business bought some inventory for 30,000 naira, paying by check. So what am I going to open? What am I crediting? What am I debiting? Just time start now. 30 seconds. Oh yeah, debit credits. Tell me.
Yeah. Inventory is an asset, so that means we are opening an inventory account. Then
Okay.
we are debiting inventory. No, sorry, we are debiting bank. We are debiting bank. Then we are
Okay.
crediting.
No, you were right before.
Okay.
What's that?
Inventory is an asset, like I rightly said. So in this
Yeah.
case, we are debiting the asset account. We are the inventory account. Then we are
Okay.
crediting cash. We are crediting bank.
Why? Why are you crediting bank now?
Yeah, because we the money the inventory was bought by paying check. So we paid out check, which
Okay.
reduce
So what does
we pay out check.
to reduce the bank, right?
Yes, to reduce the
Right?
yes.
The
Yes,
cash
to reduce
account.
the
Yeah, you have spoken well. You have spoken well. So inventory. So we have inventory. The inventory is how much again? Oh, is it 30,000 naira? 30,000 naira. So we have inventory. Inventory was bought by bank. So we have 30,000 naira. Now here in the bank, we have inventory. We credit it 30,000 naira. Is it clear to everybody? If it's not clear, please just talk. I will start and do it. If it's not clear to anybody, please just let me know. Right? Now we are in number 4. The train is moving. Number 4, Oluwatosin Williams, right? I can hear you.
Yes.
Okay, the entire inventory purchase transaction 3 was sold for 50,000 naira cash. So what are we going to put? What are we going to open? What are we going to credit? What are we debiting? Your time start now. 30 seconds. But yeah, I'm listening.
It means sales were made. So that
Sales was
means
made, okay?
so we'll debit this 50,000 naira cash under inventory.
Okay.
Bad
And
network.
credits. And credits
Yes,
what?
okay. I couldn't see. And then we'll credit cash.
Credit cash. Why? Why are you crediting cash? Wait, let me ask you. Are you
Okay.
calm now? First,
Yes.
tell me which accounts are we opening? Which account are we opening? We are going to open 2 accounts, right? How many accounts are we opening?
Inventory. Inventory is already open. Oh, I see.
Okay, so we are opening inventory. And which other accounts?
Sales.
Okay, sales. Okay, inventory and sales. Okay. So what's going to happen to inventory and sales?
Inventory will be debited.
Okay. Inventory
Well,
will be debited. All right. Why? Cash will be.
why so cash will be
Okay,
credited?
sales will be. Sales will be credited, right?
Yes, sir.
Okay. What about the cash? Hmm.
The cash
Ugago.
should
Yeah. The cash will be what?
be debited.
The cash will be debited. But that account will not balance now, right? It will not balance. The way you said it, it will not balance. Now it's pretty simple, huh? You see that statement they said the inventory was purchased is just to put you in unnecessary condition.
For
Now,
confusion.
yeah. So it's just what did you do in that thing? You sold
Yes.
by cash. That's all. So what is going to happen is going to affect your sales and your bank, your cash accounts. So you can put this one to be bank/cash. It's
Cash.
almost 10, huh? Now, sales account. I'm not sure we've opened sales account before. We are going to open sales
You
account
haven't
now.
opened.
Okay. Please, are we getting it? Talk to me. Oh.
So we won't do anything in inventory.
No, nothing will happen to inventory.
Oh, okay.
Nothing will happen to inventory.
I have a question, please.
Okay. Go ahead.
I know inventory is supposed to have a debit balance. Is there a scenario, and if there is, what kind of scenario can happen that we
That's
would credit the inventory account?
so in this kind of situation, if it is
Yes, sir.
No, I
the
understand this
accounting
one
software,
perfectly. I'm just asking.
no, even in this kind of situation, if it is your what's it called? Your accounting softwares. Huh?
Mm.
This
Yes, sir.
transaction, when you bought that
Mm.
thing, it will debit your, what do we call it? Your inventory is already debited, right?
Okay. Yes.
Now,
Okay.
your cost of sales, your cost of sales,
Mm.
your cost of sales will now be showing as a credit balance. Now, you will not have that issue because your you don't know how the software is putting those figures. Now, when you eventually sell like this, you have debited.
Yes.
Normally, what we are going to do here now is to say we debit the bank or cash, then we credit the sales. Now, we now say somebody is raising hand. Somebody is raising hand.
Yes, sir.
Go ahead.
I want to. Okay, sir. So I want to confirm what will happen if we eventually um, credit inventory. I'm talking of the question number 4 because we have an account for inventory. Then we um sorry um another
I get
here's the
so I
question.
get your question, right? I get your question.
Okay,
Your question is
so
that
in the inventory account, why can't we just credit inventory by writing sales, then we credit the amount we sold, then we debit our bank account? Is that
no,
not
no, no,
okay?
no, it doesn't work that way. So so the way it works, is that you bought inventory, you've debited your inventory account, right? Then you've credited your whatever, maybe bank, or you credit your payable that you used to purchase that thing. Now, it's the same thing if you say you are debiting your purchases account. Your purchases account is in your profit or loss. Your inventory is in your balance sheet. Now, it means that you now have cost of goods sold. Your cost of goods sold formula still remains opening plus purchases less closing. Now, opening inventory, purchases, then closing inventory. This is what
Closing
makes up your
inventory.
cost of sales, right? Now, you now have what you have done here is that you have purchased inventory. This inventory now will now be here. This inventory of initially 30,000 naira will be here. Now they now said you sold inventory for 50,000 naira. Now when you sold that inventory for 50,000 naira, a normal person would have said debit my cash and credit my sales. That account is fine. But then something happened to your inventory account, right?
Yes.
Something has happened to your inventory account. In that instance, your inventory account will now be credited. That your inventory account will be credited. Then your cost of sales will now be debited. What do I mean? Now, if I do like this now, if I say sales, but I don't want to go to all this extent because so that I will not be confusing people. So this is, it was sort of 50,000 naira. But the value uh, of that good, that inventory that you're selling for 50,000 is 30,000 naira. Did you agree? If you net it off, it will give you 20,000. This is your gross profit. This is your gross profit. Do you understand it? No. Yes.
Yes,
Do you do we understand?
No. No.
No. Okay. Initially, inventory was debited, right?
Yes.
Inventory was debited,
30,000.
bank was credited, right?
Yes.
Now,
Yes.
let me do it. Inventory debits, credits. Now we say inventory. Inventory was okay. No, let me do it in format. No, let me use it this way like this. Good, this way. Now, this thing now said inventory purchase in transaction 3, which is this one that we've put here, was sold
Yeah.
for 50,000 naira. In this place,
Yes.
you now put it here. Cost of sales, 30,000 naira. This
Cost of sales.
account news, yes, it will be 30,000 naira. It will not be 50,000 naira. Why? Because you are, I mean, if you buy something now, you are not selling it for the same amount that you are buying it now, right? That you are, because that's what you are doing to make money, right? Now,
Yes.
it's in your sales account that you now declare that you sold it for 50,000 naira. And that is why I said your inventory here will be credited. It means, okay, let's be practical about it now. Let's say you bought this 30,000 naira inventory that you bought. Let's say it's phones. Let's say it's phones you are selling.
Yes.
And you bought, let's say you bought 5 phones for 30,000 naira. You've debited your inventory, you've credited
Yes.
your what's it called? Your bank accounts, because the money you've paid for the
The
money.
bank.
Now, 5 phones for 30,000 naira. That means you bought each of them for, is this 6,000 naira now, right? Fine.
Yes.
Now, yes, good. Now, you are now selling that 5 phones. Are you getting the logic? You are now selling the 5 phones. So
Yeah.
you have your store. Bukola now walk into your store and say, Auntie, please, I want to buy phone. How many do you want to buy? I said, I want to buy 5. I mean, I want to buy 6. Thank God, market don't come. Oh, no, I want to buy 5, right? Now, it means that I'm buying all the phones that you have in your store. Now, you already have a margin that you want to use to sell your market. Let's say I now negotiate with you, oh, the 5, don't worry. You now said, okay, you want to sell it 60,000. I say, no, madam, it's 50K I have. No, I say 45K I have. Lila, it's not great. You agreed. Both of you agreed to sell it for me. Both of you agreed on the price of 50,000 naira, right? Once you agree, in your book, your inventory is showing 30,000 naira. That's what you bought it, right? Now, for you not to
Yes.
create issues in this inventory account, you now debit your cost of sales. This cost of sales, that's what will bring this value in your balance sheet, because this inventory is in your balance sheet. This value will now come back to your profit or loss account, which is your cost of sales. Your cost of sales is an expense, just that it is a direct expenses, not an indirect expense. There are direct expenses, there are indirect expenses. Do you know or you don't know?
We know.
Okay, good. Thank God we know. Now, the logic is just that I will now say this thing that I've bought, I've sold it, but then it is 30,000 I'm going to make. I will not come and put 50,000 naira here, right? Now, my cost of sales too will carry 30,000 naira. Are you getting the logic?
Yes.
Oh, you don't get it. Now, my sales will now carry the real figure I sold it. My sales, because Bukola paid 50,000 naira, it means that I will now put the 50,000 naira
50,000.
in my bank account. So 50,000 naira, Bukola transfer 50,000 naira to your bank account, pam, then credits your sales with the same 50,000 naira. That is how, because I didn't be, okay, just imagine that I say, okay, this thing is now 50,000 naira. Number one, this account will not balance. Number two, it means I'm saying the amount I bought it, that's the same amount I'm selling it, which is not possible, right?
Yes,
Yeah.
sir.
Yeah. But for the purpose of this class, this is the way you treat it. Debit your where are we safe? Debit your cash, 50,000 naira, and credit your sales account, 50,000 naira. Simple. Don't stress it. Are we getting it?
Yes, sir.
Yes. Simple, straightforward. Is it clear, Mr. What's that bro's name? He was trying to ask a question.
Yes, sir. Sir, did you
It's clear,
say
right?
no, sir? Did you say we should debit cash or bank account then we credit safe account? Is that what you said?
Yes. It's not clear?
From the explanation you gave earlier, it
Yes,
means
ma'am.
we are what you mentioned was that we are going to say debit the sales account, then we credit the bank because cash is being paid out. We use cash to pay to no sorry we use cash, yes, because cash was used.
Okay. Cash was used to do what? Talk to me. Cash was used to do what? You're not talking. Oh, talk to me now.
No, I said I'm trying to check the question to look at the question again, sir, because you
Mm,
said the inventory we bought earlier was sold.
yes,
Then we
yes,
agreed that a sales account will be opened. Now
yes.
you said we are going to credit the sales account, then we debit the cash, the bank account. But I think we're going to debit the sales account since we are is a new account. Then the cash, the bank account, which is what we use, what we. Oh, sorry, I think I'm mistaking it. Sorry,
Uh-huh.
you're right.
Thank God. Thank God you came
Yeah,
back now. So it's not about we're just opening an account or we have opened an
yes, I
account. One
understand.
account is old, one account is ancient of days, one is small boy, one is children. No, the principle is what matters. You sold something. It means if, like, let's say I sell my laptop to you now. The laptop I'm selling is an asset to me, right? But I've disposed it off to you. It means I am collecting money. And the principle say debit the receiver, credit the giver. Simple. Who is the receiver? My bank has received the money now, right? And
Yes.
my
Yes,
the
sir.
laptop that I have, I've I've taken it out of my book. That means I've sold it. So I'm going to credit my sales account. I'm going to debit my cash or bank accounts. Simple, straightforward. Is it clear now?
Yes, sir.
Thank God. Ah, this class is silent. I don't know if these people are getting this thing I'm doing now. Hey, God, help me. Busy.
We are
I'm not
following,
hearing
sir.
your voice. Uh, it says people don't sleep. Oh.
We've not slept.
Some people are slept.
Listening.
Ah, okay. Hmm. Which other one? So, so we've done about. So did I put cash sales, Abi? No.
Yeah,
All right.
you've
Okay,
not
I'll
added the
put
figure.
sales here, right? So I'll put 50. Fine, right?
It should be. Yes.
Right.
Yes, sir.
Now, more inventory was purchased for 100,000 credits on credit. More inventory was purchased for 100,000 on credits. What will happen there? Lizzie, are you there?
Yes, sir.
Can you solve this? Can you attempt?
Let me see the question.
More inventory was purchased for 100,000 on credit. What are we debiting? What account are we opening? What are we debiting? What are we crediting?
Okay, you are opening inventory account
Okay.
uh and the credit account. This is
And
just
the
known as
credit
cash.
and the credit. What's credit account? Account payable.
Account. Or is that bank or cash?
Huh? What's that? What's that?
That is payable account.
Payable account is what?
I think it's credit account. Credit will not be
Okay.
payable. That's good. Uh, more items, more. Answer the question.
Okay. Don't worry. I'm trying to open the payable account.
Okay.
So you said more inventory was purchased for 100,000 naira. Now we have inventory accounts here. So we are going to have payable, right?
Yes, sir. They will credit inventory
Inventory.
and debit payable. So the goods is coming in.
No. Will debit what?
Okay. More inventory was purchased for 100,000 on credit, which means we are crediting sales. That is inventory. We are
Why do you
crediting
want to credit
inventory.
inventory?
That is sales because
How we
we
credit?
bought
We
it's
bought
an
it,
asset.
right?
Yes, it's an
It's
asset.
an asset. So what are we debiting? What are we crediting?
So we are still owing. So we are crediting inventory and debiting payable.
Hmm. You are debiting payable. When you so we did something the other time. We said when you put something on the debit side of your payable account, what does it mean? Can you remember?
Now we
Do
put
you
on
remember
debit
the
card. And we are owing
huh?
the person. The money is
No,
going out.
no.
It's coming in.
Yeah, when you debit it, right? The money is going out, right?
Yeah, yeah. When you get it, it's
It,
going out.
that means we paid or the person or we are owing the person more. What does it mean?
Sorry.
I said when we see money on the debit side of payable account, does that mean we pay the
Yes.
person money or we are adding more money? What does it mean?
It means that we are owing that person.
No, no, no. So when you see money on the debit side of a payable account, it means you have paid the person that money. That debit entry on the payable account will bring reduction to that account. So that's how we have liabilities are credited. On a normal day, your payable account should be credited. But because you have paid money, it means it to be debited. So in this case now, hmm,
Okay.
in this case now, it's clear to you, right? Is it clear? Are you sure?
Yes. Okay.
So more inventory was purchased for 100,000 naira on credit. On credit is just to tell you that they've not paid for it. So the fact that they've not
Okay.
paid for it means that you have to enter it in a way that it will be showing that these people, they are owing so petty. And that's why you have that. If you are in practice, you see that your what do they call it? Your accounting software will have list of plenty people that your organization is owing. Those lists, your account payable, by the time you see it on your balance sheet, you see that account payable is certain amount of money, because all those people you are owing, let's say you are owing 10 people, 100,000 naira. That means altogether you are owing 1 million. Your account payable will be showing a credit balance of 100,000 naira. I mean, if you are owing each person 10,000 naira times 10, that's 100,000 naira. That means you are owing those 10 people 100,000 naira. You put it in your book as credit because you are owing them. Once you pay, let's say you now pay 5 out of those 10 people. That means you've paid out 50,000 naira. If you pay that 50,000 naira, you debit it to that payable account and credit your bank where the money flow out. Debit the receiver. Who is the receiver? The payable account have received it, which signify those 5 people that you were owing. They now credit the bank where you pay the money out. Is it fine?
Yes, sir.
These people are tired. So let me leave it as an assignment for you. Shukurat, what is Isaiah, what is
Amy
Mr.
also,
Abbas is still here.
I mean, maybe I said that you cannot
Only
finish
exhausted.
it.
This woman is still here. Lauren Adeleke is here. Kwenko Juliet. Juliet is in the kitchen eating. Amara Chuku, I've not been hearing you. Are you there?
I'm listening now.
Are you getting it?
Yes, sir.
Okay. Lizzie Abiodun, she has responded. That man, peace edit, a bit peace something, he has run away. All right. Let me start from here. I will drop this screenshot on the group. Then all of us will solve it. When are we going to submit it? Yeah.
Okay, sir.
When are we going to submit it?
Next
When are we
class.
going to next class? Go. Next class. It can be next class.
Next class.
Before the next class. So we are
Tomorrow evening.
tomorrow evening.
Who said tomorrow evening? Wow, we are going to work. Oh.
Okay, on Friday evening.
Okay.
Friday evening is okay.
Right?